100. Okay, this is the formula. So the next one is yes, these are the ratios. Okay, based on this we need to solve problem number 2, that is illustration number 2. This is a L1 assignment. I am going to explain now. Okay, but before that, total there are 4 types of ratios: liquidity ratios, solvency ratios, activity ratios, profitability ratios. So I said liquidity ratios are, so that is a current ratio, quick ratio. So the next solvency ratios are debt equity ratio, proprietary ratio, so debt to total assets ratio. So the next one is proprietary ratio. So the next one is activity ratios: inventory turnover ratio, average age of inventory, debtors turnover ratio, so that is average age of debtors. The next trade payables turnover ratio, so average payment that is creditors payment period. Okay, working capital turnover ratio. So then profitability ratios. What are the profitability ratios? Gross profit ratio, net profit ratio, operating profit ratio, so operating ratio. So the next EPS, earnings per share, then price earnings ratio. Okay, these are the ratios completed. Now based on this, my dear students, if you know the formulas very well, you can solve the problems very easily. So based on that L1 assignment I am going to explain now. So that is illustration number 2. So from the following, yes, you before that you have to download the L1 assignment. Based on that I am going to explain now. So from the following, compute current ratio, quick ratio. He is asking only 2 ratios: current ratio, quick ratio. What is the formula for current ratio? Current assets by current liabilities. Quick ratio formula, that is current assets minus inventories minus prepaid expenses minus advance tax if any, divided by current liabilities. So now I will read the problem. Items, current investments. So current investment, yes, it is a current asset. Inventories, it is a current asset. Trade receivables, it is a current asset. Short term borrowings within bracket bank overdraft, it is a current liability. So trade payables, it is a current liability. Prepaid expenses, it is a current asset. Then short term provisions, it is a current liability. Other current liabilities, it is a current liability. Short term loans and advances, it is a current asset. Then tangible fixed asset, don't consider because it won't comes under current asset. Okay. Then cash and bank balance, yes, it is a part of the current assets. Then advance tax, it is a part of the current asset. So, but based on that, you need to calculate the current ratio. That means current assets divided by current liabilities. What are the items will comes under current assets? Just now I explained. You can make it total divided by current liabilities. You can make it total. So current asset divided by current liabilities. Then you will get the answer. The next quick ratio. Quick ratio here means what? Current assets minus inventories minus prepaid expenses minus advance tax is there. You have to deduct. Then you will get the quick assets divided by current liabilities. Then you will get the quick ratio. Okay. Here current assets are current investments, inventories, trade receivables, then next prepaid expenses, the next short term loans and advances, the next cash and bank balances, advance tax. These are the current assets. Make it total divided by current liabilities. Current liabilities means here that is short term borrowings, that is bank overdraft, trade payables, current liability. The next other current liabilities, current liability. Okay, these are the items will comes under current liabilities. Then to current assets, total of current assets divided by total of current liabilities. You will get the current ratio. Then quick ratio, simple. Already you calculated the current ratio, current assets. Already you calculated the current assets. In that you can deduct the inventories, you can deduct the advance tax, you can deduct the prepaid expenses. These 3 items you can deduct. Then you will get the quick assets divided by current liabilities. Already you calculated current liabilities, so you can apply in the denominator. Then you will get the quick ratio. So these are based on this. You need to solve practical question number 2. Okay. Thank you. If you have any doubt, you can ask me.